Hello. Welcome now. Stock trades. In this video, there's going to be some extreme due diligence regarding the AMC stock. I'm going to basically share with you guys something, and this is going to hurt. This is going to hurt, right? I'm just warning you now. If you are emotional, you're not feeling well, don't watch this video. This is going to hurt, okay? So I posted a video on March 14 of 2022, literally more than a year ago, right? March 14, 2022, I posted a video. I said, why AMC why is AMC Insider selling this garbage stock with the shit emoji? And then I put share dilution coming. Okay, I put share dilution coming, right? We're going to go ahead and we're going to watch this video that a lot of AMC and ape people said, no, you're full of FUD. No, we're going to go ahead and watch this, and we're going to basically feed you the medicine that you did not listen to. We warned you, and now let basically Wall Street take you to town and literally destroy you. It's all in the numbers. I tried teaching the numbers. I tried teaching you my 11 years of experience on Wall Street, learning the fundamentals, learning all these and applying it. Well, let's go ahead and let's see who was right. All right, so let's go ahead and let's do that. Let's play the video. Let me know if you hear it. Actually, let me make sure I am sharing this correctly. I want to make sure that you guys actually, yeah, you don't hear it. Yeah, I thought so. Let me go ahead and share with you the audio because that would be helpful, wouldn't it? Right? Let's go ahead and do that. My apologies. All right, let's go ahead here and let's play it.
Look at their short-term debts. A lot of YouTubers out there are saying, well, they have enough cash to pay off their short-term debts. Well, if they do that, they only have $80 million of cash left. Do you really think a company with $80 million is supposed to be trading at $7 billion market cap? The answer is no. And if you think so, then you're going to lose a lot of money. Look at the long-term assets here. If you compare the long-term assets with long-term liabilities, they need money. These companies is at risk of going bankrupt. And you guys are going to end up getting diluted. And what's going to end up happening is the share price is going to be cut in half.
Oh, you guys are going to end up getting diluted. You guys are going to, oh, and then there's this one YouTuber with 8,000 subscribers said, you're wrong. You're so, and then now I saw his video. We got screwed over. I didn't see this coming. Because you're an idiot. You're an idiot, literally dragging the blind lamb across the cliff to their demise. Let's continue watching, please. And then I'm going to go ahead and share with you the do freaking diligence that I have for you guys.
And what's going to happen is you have to ask yourself, are you in it for the long term? Long term, fundamentally, if they were to go ahead and rebuild and build out, then of course, fundamentally, the stock price should hover around anywhere between $10 to $30. But other than this whole short squeeze thing, for all the new apes out there, you guys are going to end up basically getting your money taken away from you. What they want to do is they want to hype you up and essentially make the price go up. People buy at 40, 50. There's people that are stuck holding the bag at $60, $70 because the same apes that riled it up around 10 to 15 sold it to you. And now here you have literally proof that insiders are basically selling the AMC stock. I mean, I don't know what more to ask and more to prove from you. This is from the United States Securities and Exchange Commission. What more solid proof do you guys need? I mean, this is crystal as clear as water. But you know what? There's going to be people out here. Oh, this is spreading FUD. Oh, listen. I've been doing this for 10 years, and I want to be able to help the community and be able to show you guys the data here. If you look right now at the weekly technical analysis, this is utilizing our artificial intelligence technology, literally.
Yeah, we're not going to go over and go to the AI right now and show you guys that. But overall, people are not going to listen to this, but this is what happens. So let's go ahead. And this was in March 14, 2022. March 14, 2020. I warned you. And guess what? Your asses are about to get diluted tomorrow. All right, so let's go ahead and let's watch something else right now, okay? So let's go ahead and share the screen here. And let's go ahead and do this. And then now I want you to go ahead and look at this, all right? Look at this poor person. Look at this. I finally did it after all the lies, corruption, and me not standing Adam Aaron. No, it's not Adam Aaron. It's your fault. You're the one who doesn't even understand what fundamental analysis is. I had to sell and get out of here before they tank this thing back down to 2. It was crazy 2 years, and I learned a lot. Next time I am up $80,000, I am selling, not trying to become a multimillionaire. I took what I learned in the last run up, sold 600% gain. I wish everyone luck. He's going to pretty much have, pretty much whatever he has left, he's going to put it in XRP and XLM. And, this is a freaking crypto. Okay. Crypto, no fundamentals, doing the same garbage, dumb mistakes. And then this is what happens. What happened to trade trades? What happened? Well, let's go ahead and let's go on YouTube here really quickly. And then there's another YouTuber that's really pissing me off, acting like he doesn't know this, essentially acting like he essentially blames Adam Aaron. It's all bullshit. It's all for you guys to watch their videos and to basically do all those things. So if we go ahead and go here to his video, he deleted a lot of his videos. He only left up these. And if you sort to the newest comments, there are people drilling him. Just people first to say, the guy is a paid fake, coward, I lost everything. I hope you guys learn a lesson. Learn fundamental analysis. All right, so now let's go ahead and talk about some of these numbers here. Okay, so this is an analysis regarding AMC, and what I want to do here is have several spreadsheets that I want to look through right now, and I want to just kind of zoom in here really quickly, and I just want to go ahead and do this. And then can we take some time to walk through the data you posted? Yeah, we're going to do that in another video, okay? But we're definitely going to do that for sure. There's going to be a lot of videos, Keith, about that. But, for all the technical analysis, people, it's not about the fundamentals. Well, okay, well, what's it about? Technicals? Well, I mean, I feel like I'm driving drunk here, guys. I can't even, I can't even look at this. As you can see, let's go ahead and just zoom in kind of here. And let me just screw it. Let me just kind of make this bigger for you guys. Okay, as you can see here, this is the simple moving averages. And the price action here is in blue. And you can see this thing has literally broke through every simple moving average. It's like it's literally about to fall off the chart. It's literally about to go down on my desk, right? And if you look at the volume, you could have seen a kind of aberrant spike in volume on June 24, July 24 of 2023. And you can see here, there was a lot of spike and people just like got out. And a lot of our AI bullseyes, they said that there was buy puts. So market was moving towards killing AMC. If you go ahead and go to the ratios here, you can see that overall, if you look at AMC in the past, it was red here, right? And then it got, actually, you know what? Let's go to yearly financials. Or you know what? Actually, let's do this. Let's do the yearly ratios, and let's actually do this. Let's go ahead and do this. So let me just go ahead and see if I can fix this here. Make sure I do this right for you guys. Okay, let's let that do its magic. Can't even. Hold on. Let me go ahead and reload this. Don't save, because we don't want to save that garbage. Let's go ahead and do that. Update. Continue. Okay, got it. Beautiful. All right, we are ready to go. Okay, so if we were to go ahead and pretty much zoom in, we can see that there's a lot of red here now. Red means it's not good. I'm not going to bore you with this. Even if I explained to you what these terminologies mean, you're not going to understand. We have a course for people that are interested, but you know, it's going to take you, a psychological training in your brain to change the way people invest. Just like this gentleman here, he's going from one shit stock to another shittier one. All right, so you could see here, the majority of the green is here, and that's between 2016 and 2015. So 2015 and 2016 was a great year for AMC. Was great. The fundamentals were doing really well. This is a great way to look at the fundamentals through a heat map. You want green. Obviously, it's nice. Historically, you want a company to go from like red to green, but this thing is going from literally, green to red, right? Nothing has improved, right? Yeah, they got maybe short term, a little bit of EBITDA there, but it's all red right now. Maybe they can turn things around, but the people that are diluted, good luck. Good luck getting to your, what was it, $100, $200 average share price now. People told you, but you called them hedgies, but now you got to, eat the Kool-Aid. So 2015, 2016 was a great time for the stock. If you go ahead and go to AMC stock, I don't know if like Google has updated yet. Yeah, because it's saying like $54. That's not right. So Google needs to update this, because the stock is not up $14 today from but if you go look at 2015, 2016, you can see the stock was actually high, right? Why was it high? Well, look at the fundamentals, right? Here's 2016. If you guys probably can't see what the hell I'm pointing to. If you go here, if you look at 2016, 2015, you see all this green. It means that the fundamentals are doing great. But what ends up happening is the fundamentals start turning into shit. You start seeing a lot of red, right? You start seeing more red. And once you start seeing red here, then you could start seeing 2019, 2018. You could start seeing the movie theaters are going downhill. So then that's reflective of this 2017, 2018, 2019, right? So it's all in the math. It's all in the fundamentals. I mean, guys, you have to understand, there's a reason why people were shorting the stock. 235, let's get my average right. Jesus Christ, Wild West. Jesus effing Christ. God damn. But yeah, no, so you could see here how looking at the financials and looking at these numbers here actually will help you. Again, guys, this is like some really good due diligence. I mean, this is all for the AMC stock here, right? It's all due diligence for the AMC stock. We got historic price trends. We got the SMAs lined up, for the new ones. This is a lot of due diligence here, guys. And it's unfortunate because a lot of people don't do these due diligence. So let me kind of explain to you kind of what happened, right? A lot of folks, they got rug pulled, right? The people that made money are long gone. They're enjoying it. They probably have their money in Nvidia right now. They're enjoying it. People that got screwed over, you held the bag. You held the bag. You listened to some dumbass online tell you, oh, it's going to go. And he was making videos, making money off of you. I mean, it's just like so sad. And then for the people that actually made videos to warn you, to tell you dilution coming a year ago, someone tells you, oh, I never thought they would dilute. They're lying to you. It should show you they don't know what they're saying. But again, this is just for people that watch our Clover videos or people that watch our other videos, just to kind of share with you what happens when you're an unintelligent investor, right? So let's go ahead and go through the comments and we'll, and then we'll wrap up this video here. Sorry, this is kind of like hurtful, it is what it is. But this is welcome to Wall Street, right? All right, so let's go ahead and let's I bought AMC because all the YouTubers could not be wrong. I found I would have done better on my own. Absolutely. So here and there in terms of day trading, we do have a stock terminal and a website. Unlike those YouTubers that try to sell you something that's garbage, we actually have something that's worth a lot. At least we think. We've been featured. Here's the pricing structures, and here's what it includes. But we've been featured on Bloomberg, Yahoo Finance, the Nasdaq, the freaking Nasdaq. We've been featured on, and you can read the articles over kind of what we did here. regarding our featurement on freaking the Nasdaq, dude. And that's me right there. For folks that want a little bit a sample video of, like, have you ever to all the people, have you guys ever wondered how these analysts set price targets? Like, how do they do it? Well, there's like two different types of price targets. Analysts that set them for retail investors, which is full of shit. And then the analysts that set the price targets for their, rich hedge funds, right? So I teach you basically how they do that. And, before someone says, oh, you're full of shit, well, here's a sample price target. This is of the NVIDIA stock. And here's a video. It's a free video you can watch. It's a sample video. And you can see the NVIDIA stock. We showed a price target of around $500 to $600. And the stock was around, here's the stock was around $100 when we were making the analysis. And then we set the price target here, which you can see the price targets here in our intrinsic value calculation. And then if you were to go to NVDA stock, well, look at here, guys. The proof is in the pudding. Look at that. If you would have purchased NVIDIA down here when it crashed again, you would have made 3x your money, right? And if you were to actually purchase NVIDIA here when it became free cash flow positive, which we show in the video, you would have basically made 11,900%. That means if you, let's say, for example, bought NVIDIA, I'll kind of give you an example. Let's say you buy $10,000 of NVIDIA. It's at $3.89. Let's say we bought it at $4, just to make the numbers work out. You spend $10,000 on NVIDIA and you buy at $4, you'll have 2,500 shares. 2,500 shares multiplied by $500. You just turned $10,000 into $1.2 million. Okay. So that's how real investing works, right? You have to ask yourself, how does it work? Well, this is $1 trillion market cap. Everyone wants to be in NVIDIA right now, right? And, here are the resources, and there's some testimonials down below. If you guys really want to change how you view investing and do it right and learn about the fundamentals and learn about essentially how we mix one of the greatest investors of our time, Benjamin Graham and Warren Buffett, intelligent investor with technical analysis, you have the information. But let's go ahead and yes, there is some day trading involved too. Biggest hurt is I wasted 3 years on AMC, but I'm still ahead on AMC. Of course, yeah, it's just the time too. Wasting the time is a big one. Today, I saw on Webull comments that someone was down $170,000 on AMC. That is terrible. That is literally financial ruin. Imagine if you would have put $170,000 in NVIDIA at $4. Let me just do the math here. Let me do it on my phone, right? So let's say $175,000 divided by $4 multiplied by 500. Dude, that guy, if he actually knew what fundamental, and he wanted to be a millionaire, right? That guy, if he actually understood what investing was, he could have turned that $170K into $21.8 million. It's all an understanding. It's like studying an ice cream truck. You want to make sure you study an ice cream truck, you see how much money they make, and then the market's not going to price it correctly. And those are the stocks we like to look for, right? You'll see with Clover. You'll see in the next couple of years, you'll be like, oh my God, I wish I did Clover, right? But again, you're watching it now, right? So the action is yours. Okay, so I'm up 30K only because I was in the 72 run up, then I bought back for losses 2 times. Yeah. Buy when there is blood on the street. Guess what? It's bleeding. I started a position today. Yeah, I mean, it could get better, but again, you're buying a company that's financially distressed. Why not, look at companies that are financially strong that no one knows about? Again, the whole taking Warren Buffett approach and applying it, Warren Buffett also does due diligence and research and looks at the annual 10K report. Did you look at the annual 10K of AMC? If you did, you wouldn't do that. But hey, it's in your name. Big risk taker. All right. I feel like the AMC shareholders would benefit more if they sold covered calls. What do you think? I mean, it depends if the covered calls even give anything. Maybe. I mean, you have to look at the option chain. No, we talked about that during fall of AMC 2 months ago. I was going to buy Tencent, but I listened to the YouTubers and bought AMC. Yeah, that sucks. Dilution, not the problem. A, screw everyone with the RS. So you do understand that when you dilute a shareholder, in fact, we should totally do an intrinsic value calculation. You know what? Let's do that. Let's look at the price target of what would the AMC stock be. Let's do that, right? Let's actually do that. So we can actually show you what dilution does, right? So let's go ahead and let's go to, let's do that. It's going to be a little bit longer video, but it's going to be worth your while here. And you guys can see the intrinsic value calculation in action, so might as well, right? So let's go ahead and do the intrinsic value software here. I'm just kind of setting everything up here, so bear with me for just a minute here. So I gotta just make sure this is good here. Gotta make sure everything looks pretty for you guys. Okay. I wasn't gonna do that, but I think I am going to. It's going to be helpful because I'm going to show you how these guys set price targets on a company, right? So I think this will be very, very useful for the AMC community. Because who knows, maybe this person is right. Maybe the big risk taker is right. Maybe it is undervalued today. But again, I don't know what the dilution is going to be for tomorrow. So, today was a reverse stock split. Tomorrow is the dilution. So I'm just going to show you what it's valued at right now. Okay. And we're going to see. Okay. So let's take a look. So let me just go ahead. Go here. A moment here. I just got to make sure this looks good here for you guys. Okay. So we got that. Oh boy. Okay, good. So now let me go ahead and share with you the screen here really quickly. Okay, so there it is. All right. So we got the data that we're going to be using. Again, we're going to be using the data that AMC has, right? So we're going to take all this data that you see. So here's the revenue, let's look at, 2019 to TTM, which is the trailing 12 months. Revenue's gone down, but it's slowly climbing its way up. They just hit gross margin profitability. Net income on the TTM. They may have been net income on the quarter. We'll have to see, but they're still negative. Shares. AMC back in 2016, 2017, they had 99 shares, 128 million shares. Now they have 1.5 billion shares. They just did a reverse stock split. So you take the 1,513 million shares, divide that by 10, and you have to divide all of these by 10 too. 99 divided by 10, right? Then the free cash flow is obviously negative. We're going to estimate the free cash flow, and we're going to look at Yahoo analyst forms to look at what the growth rate is going to be. Okay. And what we're going to do is we're going to go to our intrinsic value calculation here, and we're going to go ahead and basically do this analysis here. Okay. So all right. So let's start from there. So we're going to go to Yahoo here. Okay. And once we pull up Yahoo, and you can see NVIDIA is just kind of killing it, man. It is killing it. Home market is in a ripple right now. People are like, what's going on? So let's go to the analysis for NVIDIA and let's see kind of what they expect. So they're expecting around 18% growth in 2023 and around 3.5% growth. So I'm going to put 18.7% growth right now for AMC, but then I'm going to go ahead and I don't think they're going to be growing 18% for the next 5-10 years. It's a movie theater company. I think it's going to be one of those luxurious things that people just go to because, the streaming services, Netflix is not going anywhere. Disney Plus is not going anywhere. HBO Max is not going anywhere. You get the point. But we're going to go ahead and first put 18.7. Okay. We're going to put 18.7. Right. Let me make sure. Right. So yeah. So now we got the growth rate. We're going to go 10 years into the future, and we're going to discount back at a 10-15% discount rate. So we're going to 2032 and discounting back at today's present value. Again, if you haven't seen this before, you've been lied to. You've been literally screwed over because this is what the billionaires do. This is what multimillionaires do. It's called the intrinsic value calculation. You can Google it and check every word I say. Right. So, all right. So now what we're going to do is we're going to estimate the free cash flow. Now, current right now on their TTM revenue is around 4262, which is around 4.2 billion. We're going to go ahead and do 5% of revenue to estimate the future free cash flows. We're going to have them at 213 million. Okay. And then we're going to go ahead, and my poor puppy is running and crying in his dreams right now. I'm like, what's going on? They have around 1,513 million shares. Again, they just they just did a reverse stock split. So 1513. Well, actually, let's just go ahead. 1513. Okay. And let's divide that by 10. That's 151.3 million. So this is the price of AMC. Okay, so this is the price of AMC. Are you ready for this? So a recession level of $17, a bear case of $31, a base case of $42, and a bull case of $60. Now again, this is the reverse stock split price, and this is them growing at 19%, which we know they're not going to grow in the long term, right? We're going to go ahead and just put the yesterday's price, which is the share count of 1.5 billion shares, and the value of AMC should hover around this price. If you don't recall, AMC was around this price, right? Wasn't it? It was, wasn't it? Right? AMC was around this price. It was around $6 to $4, if you don't remember, right? But here's the thing. Here's the beautiful part about this. Adam Aaron then went ahead and did an ape shares, equity preferred units, and he went ahead and forcefully diluted you guys, right? Which this is not included in the dilution share price. But then, he went ahead and did a reverse stock split. And like we said, if we do a reverse stock split, it's going to be 151.3 million. So let's go back to the reverse stock split. Okay. So this is the reverse stock split price. Okay. Anywhere between $42 to $60, right? So based off of this, now, again, I don't know how this is going to look like tomorrow, but if you look at it, and if it's a 1-to-1 unit, then technically it should be 1437 times 2, which is $28.74. So it's technically in this region. Could there be some upside? Yeah, there definitely could be. So there could be some form of value in AMC in terms of it increasing, right? But again, this is the dilution share price. We still haven't increased the share price. Okay, this is what I'm trying to explain to people. Now, I don't know how many ape units are there, because he really confused the shit out of investors. I don't blame you guys. I've never seen this before. People do this. How many ape shares are there? I'm curious. I mean, does he say? Let's just look at what Yahoo says in terms of the outstanding shares. Yeah. So it looks like it's around the 1.5 billion. So it's a 1-to-1. Don't wait. Yeah, this is ape. Right? So because of this, now we're going to dilute you guys. So you take 151.3 times 2. Now you have 302 million shares. So going back to this, dilution is not the problem. Watch. Yes, dilution is the problem. And I'm going to show you why. So this is the shares outstanding. So we're going to do this. We have 302.6 million now. So 302.6. Now watch what happens to the price now. Boom. The price pretty much halved, right? So now the bull case of AMC is $30. The bull case is $30. Now, if we do the math, and if we go to AMC stock, 14.37, you take 4.37 multiplied by 2, because they're going to merge the shares together, you're going to get $28.74. And it looks like it's trading at the bull market value. And that's at 18.7%, which means if they fall down to 3.5% in 2024, what we can do is we could take the halfway point to be extra safe. 18.7 plus 3.5. Again, we teach all of this. I know this is very complicated. 2022.2 divided by 2, that's 11.1. So the growth rate will be 11.1. So the price of AMC is most likely going to half again in 2024 if they don't get their shit together at 7. So the total price of AMC now will be $17.35. So people are going to lose another 50% off of their monies, right? And if they keep diluting more, which they plan on doing anyway, AMC is going to be cut further and further and further, and all the shareholders are going to get screwed. But let me just tell you something. Do you remember when Adam Aaron sold millions of dollars of stock and said that he wants to do his retirement money? He destroyed you guys. He literally took your money and you bought the shares and he sold them to you and so he can retire. If that doesn't make you upset, I don't know what will, right? So then now, what you in today's value, you're buying AMC, hoping it'll grow 18.7% for the next 10 years. Maybe, but it's just a risk, right? So I hope you followed the math here. This is really complicated, a lot, especially if you haven't seen this before. But we went ahead and included the dilution, included the reverse stock split, and you can see the market is accurately pricing this. There are people out there in the ape community that are very smart. You see how they sold? They probably did put options. You see how smart people are? The market valued this company correctly. You see that? It's hitting it right. So let's go ahead and let's look at the comments here. And I hope that was helpful. Let me look at the comments here. Don't understand why the CEO would sabotage his own company. Hell if I know. Because I think honestly, that, like I said in the video, they are dying. They need cash to survive. Right? Oh, why did okay, yeah, we'll definitely talk about that in future videos, right? But that because there's obviously value, right? So there's value in the company for Clover. AMC was not supposed to be a fundamental, it was supposed to be a pump and dump. Well, yeah, now it's dumping. Your math don't include all the synthetic shares in people's accounts. Okay, well, here's the thing. I know there's synthetic shares and all this argument about this, but I'm valuing the company at its shares that are reported to the SEC. Now, if there's synthetic shares, then the price will be lower, right? Because if there's more shares, think about it. If I buy a pizza for myself and then I have 8 slices to myself, if I bring in a friend of mine, I have to share my pieces. If I invite all of you guys watching right now, I'm not going to be left with anything, right? And that's what's happening to the AMC stock. Based off of my math, it is looking good in terms of, I'm doing things that have been successful for me for 11 years. Okay. I've been in, this is what I've been doing for 11 years. Right. And I've learned it from people that have been doing it longer. Right. Okay. The stock was a one-hit wonder. AMC is done. It's dusty industry. Absolutely. New movies will be released. New streaming services users charge premium. Yeah. But it doesn't explain based off of the fundamentals now, it's terrible. It's going to take a miracle to get back to those prices, right? A is trying to help short. And he's not trying to. Yeah, most likely, right? Most likely, yeah. Zip Trader just released a new statement. AMC, yeah. I don't want to talk about that. Yeah. Use your mind, use your brain, right? AMC didn't need cash that bad. If he did, he would sold ape at 10 to 6. So if you think AMC doesn't need cash, then I have a rude awakening for you, my friend. Let's go ahead and let's show again. It's all in the numbers. You can't. The numbers don't lie. So if you look at the cash for AMC, and this is the balance. Damn. Let me go ahead and. This is the balance sheet for AMC. This is the cash and cash equivalents. Okay. This is 2011 and now. Guys, listen. Back in 2011, AMC had $417 million in cash. Now they have $435 million in cash. Non-inflation adjusted. I mean, this is probably worth maybe $200 million. Last year, they had $631 million, most likely because they raised money off of you. In 2021, they had $1.5 billion. Because they raised money, got debt. And so 2020, the pandemic, they had $300 million in cash. 2021, $1.5 billion. Hooray! A lot of money, right? That's when the short squeeze happened, right? Because people didn't anticipate AMC securing all that cash. Then 2022, 631 million. Now, 435 million. Literally within 1 year, of AMC operating, they pretty much burned $1 billion in cash. They burned $1 billion in cash. Again, you know, the numbers are all here, right? It's all in the pudding. It's all here. Let me, if I can zoom in here. Maybe I can zoom in. Right there. See the cash? It's all in here. Do you have a free trial for the website? So for our website, if we go to Al Stock Trades here, we have a couple of tiers. We have the stock terminal, which we do have a 7-day free trial for the stock terminal. Then it's $19.99 a month, but it doesn't include the mastering stock market course, which includes lifetime access to the stock terminal, which essentially means you don't pay any monthly for the rest of your life, right? But here's the catch. The mastering course has the intrinsic value calculation, which is the $1 million maker, right? I spent my whole life, critiquing this and making this the best, right? And this is what it includes along with lifetime access. And you can all see the differences here of what it includes. You can see it, and you can see our competitors, Morningstar and Yahoo Finance. You can see what we offer versus what they offer, right? All right. NVIDIA that you showed during 2014, Clover's around that before the market jumps. Patience will be rewarded. Exactly. Now, again, in terms of, Clover has to be another United Healthcare to get to that level, right? I'm not banking on Clover to becoming that. I'm, anywhere between 20 to 50. And if we get lucky, 100, 140, that's good. You know what I mean? People, most folks don't need double digits for Clover to become a millionaire, right? But I hope this was helpful. As you can see, Ryan, it's all in the numbers. You see how, once you say something, I go back to the fundamentals, right? And I'm like, no. It's because of this and this and that. I always look at the fundamentals. The fundamentals is where it's at. Again, I'm sorry you guys got caught. Yeah, I know it definitely was. And we'll talk about that, but yeah, there's going to be a lot of videos on Clover, regarding the fundamentals and analysis. But as you can see, guys, everything I'm telling you, you see the math. Has anyone done this? No, of course not, because they don't know what the hell they're talking about, right? You have to ask yourself, what does that person do? I'm going to become a doctor, right? You can Google my name. You can see who I am, Albert Allen. You can Google who I am. You'll see I'm going to be a physician. My future wife is going to be a physician. We're going to be a really blessed family. And what I want to do is I want to teach you guys how these people, when I say these people, these billionaires and millionaires think. How do these multi-billionaires think, and how do they do it, right? So I can bring you on to the other side, okay? Because it's really fun, guys. It's financial freedom is amazing, okay? That's all I have for you guys. And it's a privilege and honor. I'll see you on the next one.